Hi, I am Carlos Karström, author of the book Paleo Trading, How to Trade Like a Hunter-Gatherer, and manager of the Paleo Fund, a small hedge fund that was launched last month and are now starting operations. It's been a while since I published this tactical market update. I've been busy, and it's been Easter, so that's the reason for that. And frankly, there's been a lot of things happening in the market that's not really easy to explain. So, but now it's time to take a look at how things look, and it's of course more interesting for me now than ever, because I'm just starting to implement these trading strategies, starting to employ the capital of the fund. So, but to look at it from a broader picture, these videos are mostly meant for, and the book are mostly meant for traders, those who take active positions in the market every day. But I know a lot of people are also watching that have a longer term perspective, and my message to them is that we are in a bull market, albeit in perhaps the late phases of it. So lots of things in the market are fairly expensive if you look at traditional fundamental valuations, and a lot of people are writing about that. So I won't go into that debate. Things can stay expensive or seemingly expensive for a while, and growth stocks are always looking expensive. So a lot of people can comment that better than I can. But from a technical and strategic perspective, things have been a bit stretched. We are obviously, as we are on a top, not perhaps the top, but we are at least not on a bottom. So things have been moving fairly rapidly upwards. I can show some charts here. The most extreme example of the things I look at every day was the German DAX 30 index of the 30 largest German listed stocks, which have been moving upwards for a long while. You can see it at the chart here, and then and reached extremely overbought levels on measures such as the RSI. And then after moving up for a long while, just as I was starting to be ready to take positions for the fund, after having had a clear uptrend, the index started to move into a very tight box, seemingly no movements, plus minus 0.3% every day. So trendless, no direction, a market where you should be very hesitant to put on large positions, actually, because you never know where the next big move is going to be. You have to wait for the market to give you the clues. And if you look at a smaller chart here, or that's we're moving in from daily to hourly candlesticks, you can see that there's been hardly no movement at all, and then it's suddenly broke out to the upside, only to fall straight back into range again. And we've seen more or less the same picture in the S&P 500 and in the Nasdaq. They've been differing a little bit. The S&P was initially a bit stronger, and then just as we were eating the Easter steak here in Norway, the markets in the US exploded a little bit for tech stocks to the upside, only to move into a fairly tight range again now, and being a bit trendless. And you can also see that some of the former leaders leading into the prior top in the market, such as the classical innovation stocks that you often find in ARK Innovation ETF, for instance. It's a good measure actually to look at that ETF, just to see if these stocks are leading the market or if they are laggards. So I use that as a temperature measure to see the risk appetite. You can also use, and I do, measures such as the Bitcoin. But I was actually, after a couple of days of consolidation, I was starting to take positions for another up run in the market, and all the signals were giving, so that the market was trending fairly well. And just as I was sitting taking a cup of coffee together with my mother, we heard from the other room a whole avalanche of stop loss orders going through, actually ripping all my capital out of the market again. And that was the rumors of a Biden tax proposal that sent the Nasdaq down almost 2% instantly from its top, the S&P a little less. but then it stopped. And this can be used actually as an interesting example, because now that I'm trading this hedge fund, it's fairly small, but it's close to $10 million. That's capital that are being employed according to the strategies in the book, how to trade like a hunter-gatherer. So one of the things we do, of course, is like this. You have to wait, watch the market, wait for high risk-reward opportunities, and then enter in the direction that the signal is given. That's the main strategy, to follow the trend when the signals are there, and then to employ the capital, but with a fairly okay stop loss. So for trend positions, you have to give them a little bit of room. For more aggressive trading positions, you have tighter stops. So as my trend positions was ripped out of the market, another trade that's also described in the book, that's more a shorter term trade, actually materialized, because the size of the move from top to bottom was exactly 1 ATR, or average true range, statistical measure that you can see for how much an index or a stock usually moves from top to bottom, or from open to low and high in a day. That's one of the trading setups that's described in the book. It's actually called the money machine. But when your trend positions are ripped out of the market, but you get a signal to do a shorter term trade in the other way, one thing is that you use tighter stops, but the other thing is that you employ less capital. For counter trend moves, I use at most half, usually a quarter or less of the capital that you can use when you take positions in the direction of the trend. So that's something to think of. And I'll be going deeper into this later perhaps, or you will find a lot more about it in the book. One small point actually, I've been updating the paper version of the book. It's available in an ebook and a paper version, so there's been some errors in the page numbering actually from the printing in the US, but now that should be corrected, so everything should be fine there. And as for the ebook, there's somebody out there who think that you need, this kind of physical, you have to buy the product that's called the Kindle Reader to read the ebook. But no, you don't. You just download Amazon's Kindle Reader app for free in the App Store, and at least on the iPhone, you can use it on your phone, you can use it on a tablet, or you can use it on a computer. And it all synchronizes so that you can pick up where you left, you can take notes. There's lots of links there, internal links in the ebook, and also some external links. So that's what I mean when it's the Kindle version. It's for use in your app that you can read on your phone or tablet or whatever. So that's of course also the most environmentally friendly way to access this materials. So anyway, the market is interesting. I am eager to employ more of the capital of the fund. So far, I will take trend positions whenever I see a clear direction in the market. And apart from that, we participate in smaller trades in single stocks, smaller trades in futures, some even in Bitcoin futures. I've been also in oil. And then we are participating in interesting capital raises that comes along in the market from time to time. So that's what I mean about being both a hunter. I look and watch for larger setups like a mammoth or an elk, but you have to eat. So if I find some interesting things, if the market gives short-term opportunities, I take them there as well. And that's the main point in trading like a hunter-gatherer. So you'll find more about all this in the book, or if you follow this YouTube channel, I'm sure to post another video as soon as I get time. See you then.